A big thing this year is capital gain taxes. We recently saw what Warren Buffett did. He sold out of his Apple holding. And a lot of people believe that that's because of capital gains. Although that's all speculation, we don't know what the reason behind that. Maybe he thought there's better opportunity out there, or perhaps he thought Apple was overvalued. There could be many other reasons, but one of the reasons people, at least in the tax world, people are thinking is that there is a chance that Democrats may increase the capital gain taxes next year. So if that happens, that can be very painful. So, for example, if capital gain taxes do rise to 44.5%, that's what a lot of people are talking about. And then on top of that, state taxes, that can be very, very painful. So I'll talk more about that in the details just in a second, but just want to bring that up that this is happening right now. A lot of people are kind of hedging against that. They're trying to figure out how they are going to deal with this capital gain tax problem if Democrats do decide to move forward with it. So there has been a lot of conversation happening about politics these days, and obviously taxes is always a big part of that conversation. We have two different candidates with two opposing views about how they would like to tax Americans. But this election year, I think there is some additional confusion. For example, there are some proposals by Biden administration, and people are kind of mixing it with the Harris administration because they think that Harris will carry on the same policies as Biden, which she may or may not. So one of the policies that everybody been talking about is that Harris would like to increase the capital gain taxes from currently maximum tax bracket of 20% to 44.6%. So that is making a big news. So just to clarify that, currently we have 0%, 15%, and 20%. Those are the three tax brackets we have. Depending upon your income, you pay capital gain tax in one of those brackets. She would like to increase that to maximum of 44 and a half, 44.6 to be exact, if the total income is over $1 million. And I think I'm speculating about total million. What they are saying is that for people earning $1 million. So there's some confusion around that. I'm not sure that means earned income, does that mean active income, passive income, investment income, total income? Is it for somebody who is single, married, filing jointly, for corporations? So there's some confusion around that. So I don't know. I don't have a clarification on that, first of all. But that's what all the buzz is about. So now you might say, well, even 44 and a half, Deepak, you're saying that we could be up to 58%. How did we go from 44 and a half to 58%? Well, I'm coming up with 58% because you got to add state income taxes to it. For example, in New York, that number will be more like 55 and a half. And in California, that number will be more like 58%. So that's very painful. Before I go any further, a couple of things. Just because a candidate proposes such a, you know, such a painful tax doesn't mean it will get passed, especially if the House is divided. Who knows, who will win, first of all. But let's just say Kamala does win, and let's again make a second assumption that she goes through with this. She will need to get Congress on board, and I think she was going to have a really hard time getting that approved. So but that's what all the fuzz is about. The second reason why I thought I should make this video is because I watched some videos of prominent real estate figures recently. I'm not going to name them because purpose of my videos is to educate, not to have a controversy with somebody else. Although having a controversy does help you get a lot of clicks and views and all that kind of good stuff. But anyhow, we'll stay away from that and stay with the organic method. But what I have seen, these major real estate players, and when I say major, meaning these are the people who you always see on YouTube. They try to be your trainers, they try to be your coach, your guides Why? Because they want you to invest in real estate, and hopefully you invest in their real estate. Like they're running some sort of fund, some sort of syndication, and they want you to invest there. But their main goal also is to get attention. So when I make a controversial statement such as, Kamala Harris is going to destroy the economy because she's going to raise the taxes up to 58%, that does get you a lot of eyeballs, and people pay attention to you, and obviously then they pay attention to what you're selling. But I have, well, I guess I do have a little bit of interest that some of you guys decide to do some tax business with me. Come to me to get some advice on taxes and hopefully choose us to file your taxes. So I'm not completely unbiased. I do have something to gain out of this. Um, so, few things. What these people are saying is that, look, how much more money you would have to make to pay for that extra tax, 44.5%. And then they say, look, average home is $400,000. You would have to get an equity of almost 50% addition to pay for this tax. But couple things. Number one, the proposal is for people who are making over $1 million. People who make over $1 million, they're typically buying a lot more expensive property. They're not really buying a $400,000 property. So that's one. But again, they are referring to this because they want people to invest in their fund. Second thing is they are kind of pretending like there is no capital gain tax today. Well, there's capital gain tax today. Yes, they're talking about increasing, but it's not like it's going from 0 to 44 and a half. There is a capital gain tax today as well. So that's second thing. And third thing is, even if we agree with them, oftentimes most of these people are missing on state taxes. Like I said, in New York, if you add the state tax, that'll be 55 and a half, and California, that would be 58%. So that's a big problem. And the second part of the problem is this tax on unrealized gains. Now, I don't think that would ever get passed, honestly, but who knows? Anything is possible in the world. But they're talking about that for people whose net worth is over $100 million. And I thought I'd bring that up to you because that's another one I'm seeing a lot of chatter about. So a lot of people are, saying that all of a sudden everybody would have to pay tax on unrealized gains, which is again not true. It only applies to people whose net worth is over $100 million. Now, I would say I think maybe few of my clients might have a net worth at that level. So yes, it might impact them, but majority of them, I would say good 98, 99% of them, net worth is less than $100 million. So I don't even know if that's really so much relevant to middle class, or at least to my clients, my audience watching this. But the idea is the proposal calls for a minimum tax of 25% on unrealized gains. You know, so I'm going to leave that alone, whether that's right or wrong, because, like I said, most of my customers really don't fall into that category. So I'm not really so much concerned about that. But I did wanted to bring this up because what will happen is that you will, over the next few weeks, as the election times comes closer, you're going to see a lot of advertisement, a lot of content on social media, Facebook, YouTube, Instagram, and so forth, where people will be talking about tax policies. And I'll talk more about other tax policies, but this one is particularly about capital gains. But don't be fooled. Don't make your decision just based on partial information. There's a lot more in the tax world. I would say majority of the content that I watch on social media these days, these people are not even from tax. These people have some sort of agenda. Like I said, they are running some sort of fund or some sort of real estate transaction they want you to get involved in, and that's the primary idea. Or maybe they want to sell a book or some coaching program or something like that. So most of the time they don't even understand tax altogether. And when I look at their calculations, it's hilarious because they're not really comparing apples with apples. They're kind of like mixing all kind of things together. Now, having that said, let's say if we move forward with this policy, do I feel that is beneficial for us, or is that uh, risky? In my opinion, I think if you increase the capital gain tax, you bring it down to kind of like a short term. That's where we are right now. Really, that's what they're really talking about, right? They're saying, look, why should we give this special treatment for capital gain. And by the way, I think I also saw somewhere where Harris was talking about get rid of step up basis as well. So how rich people transfer wealth. So that's an awesome tax strategy for many, many years. She's talking about getting rid of that as well. Yes, those strategies help rich people. I agree with it 100%. But guess what? They also help the middle class. They also help the lower income people. If you buy a house and you're able to transfer that tax free to your kids, that's like generating generational wealth. I don't understand why would we get rid of that. That just makes no sense. And if we do get rid of that, perhaps there should be some income threshold on that as well. But then again, now you start to do that, and we sort of like becoming this very unfair kind of a society, um, and that can have its own set of ramifications. So that's one point. Point number two is even general public, when you increase the tax and it becomes like an ordinary income, all of a sudden you will start to see a lot of volatility in the market, kind of what we see in real estate. Why? I'm not sorry, real estate, in stock market, because you have all the information. You can go on your Robinhood app or Fidelity or whatever you use, and within few seconds you can buy and sell securities without taking a time. So many times when I'm talking to clients and I try to judge where they're coming from, and I'll ask, like, for example, somebody owns an Apple stock, and I'll ask them, why do you own an Apple stock? What's your thesis behind it? Oftentimes they don't know. They have not really thought that far. The answer is everybody's buying it, so I'm buying it. And Apple is a pretty good company, stable company, and, not an investment advice, by the way, just my opinion. But I picked that an example because things can go wrong with any company. Doesn't matter. And if you're not keeping up with what's happening in the business, then most likely you will lose out on that. And that's what happens because I mean, I recently met a couple. They were making well over $1 million, and I looked at their tax return, and they have tons of capital losses. And I'm like, how can you lose money in such a bull market for last few years? Like, what happened? Um, and again, the answer is because they did not pay attention to what kind of business they were buying. And I think even that has less to do with, more has to do with all the noise in the market, all the stuff that we hear on YouTube and social media and other influencers out there. And we think they must be right. They must know something more than us. And they might. But people are all like, people look at the same news, same information two different ways. You need to be able to come up with your own decision. You need to be able to decide in your own way which way you're going to go. So my concern is that you're going to hear these people, they're going to tell you partial information. They will try to scare you. I already saw like probably 10, 20 different videos while I was researching earlier, and I'm like, oh my God, these people don't have no clue what they're proposing and how this policy will work out, if it works out, which I think I'm very doubtful about that. So be careful with that. But if they do implement it, the biggest problem going to be there will be a lot of volatility in the market, and people will start selling real estate, cryptos, uh, everything else, like after a few days. Why? Because there's no incentive to hold it for longer term. What happened is, let's say you buy something, maybe even a TV. You go buy a TV, no matter how much research you have done, after you purchase the TV, after a few days, you are going to have a buyer's remorse. You're going to feel like you made a bad decision. It was not a right thing to do. And now you want to go return it. Same thing happens with stocks. People buy it and then they go like, oh my God, I made a mistake because it went down by 5%, 10%, and now they want to sell it. However, right now, people at least have it in their head that if they hold on to this for over 1 year, they will get a better treatment on taxes. So they decide to keep it for a little bit longer. Now, if you take that treatment away, now they have no incentive. So they are going to start trading more often. Obviously, that is going to create a problem as well. It's not good for the market, not good for our economy. It's not it's not good for anyone, not even the government. I don't think they will. Well, I guess it can be good for the government because they will be charging ordinary tax and people will be trading more. But I'm just thinking in the long run, because average person is not building wealth by doing these kind of trades, that can have a major impact, right? So that's what I'm worried about. But again, idea here is that, hey, look, the average Joe doesn't understand this anyway. And by the way, that's why I have the YouTube channel. That's why I do monthly meetups. That's why I have my group. So if you want to learn the basics, you want to learn your risk, you want to learn how not to make mistakes, learn from some of the legendary investors in the world. I learned That's where I learned from, and I share that knowledge with you. So if you want to be part of that group, just send me a message. I'll be happy to add you to group where we meet on regular basis and we discuss these things in detail. If there's anything I can do to help you out with your taxes, don't hesitate to reach out. We are, full service tax firm, so we do anywhere from your accounting, bookkeeping, payroll, filing your taxes, representing you before IRS and everything. Um, so if there's anything I can do to help, then definitely reach out to me. And I'll post another video pretty soon where we'll talk a little bit more detail about other tax plans that both candidates have. All right. But those were some of the important things about capital gain I wanted to bring out before you kind of get caught up with one of these other social media stuff where people just kind of give partial information and don't cover all the details about how that plan's supposed to work. But in my opinion, I think regardless of which candidate is will win the election, I think we will probably have a very balanced House and Senate. So taking any kind of a bad decision will be very difficult on both sides, basically. All right. Thank you very much, guys, and I'll talk to you soon.